Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Well, the Australian dollar still not backing down as it rallies further since rebounding off the trend line and into its fourth consecutive day towards that key level. Once was at 67.15 and now 67.60.65. Getting a little bit cautious here as we move to the weeklies. They could actually see a little bit of profit taking if we just raise this up a little bit just towards that top side around 67, 60, 65 to 68 cents. That being said, the market was still a little bit more confident after the Australian November CPI cooled more than expected from 3.8% to 3.4% year on year on slower electricity prices rising. Though underlying inflation remains sticky with the trimmed mean CPI at 3.2 is what the RBA looks at. Anyway, for now, market still remains somewhat cautious ahead of the February meeting. All eyes will be on this Friday, as the dominant driver being the US non-farm payrolls, with forecasts slightly higher, around 66,000 jobs added, and the unemployment expected to edge down from 4.6% to 4.5%. Given the fact that the market has been somewhat strong, there's still room for upside movement and any pullback to be limited around 67.05. And most probably where this trend now is at 66.65. Moving on to euro, a little bit to the downside in terms of the market failing to ignite from this dragonfly doji. Nevertheless, I'm not getting negative at the bottom side of the range. The support is seen somewhere around 116.75 and could see a rally on from there and look back towards a correction to 118. Dollar yen tempting once again to try and recover, but the technicals are still heavy. I'm still a bear, and I still believe the market's risk is to the downside. Therefore, break of 156.15.20 could give further scope towards 155.5 to maybe 154.70.75. Resistance seen around 156.85 as minor, and a little bit firmer around 157.5. Sterling, well, the market was a bit mixed, but I feel there is still room for improvement. After the 24-hour weakness, we could see a rally now back towards a topside level of 135.25 to around 135.80. Any weakness should be limited and support seen around 134.65. Looking at commodities, well, they're still holding very firm after the rally overnight reaches its target of 4,500. But still a cap around that 4,500 to 4,550. Nevertheless, I'm not going to get negative, and I feel this trend is still bullish, and we could still see further gains, maybe on to 4,570 as a potential target. Wrapping up with oil, it gives back its gains. Very mixed and very choppy range that we're seeing here. And we may actually see a little bit more to the downside. Looking towards 55, 60, 70 before a bounce, and eventually look back towards 57, 59 to $61 a barrel. Well, that's a wrap. Thank you for joining me. As always, look out for the intraday report. I hope you enjoyed a great start to the